Right, Ledgers, welcome to the profit taking concept vid. Okay, so did this twice actually. One was extra really long. I was just getting carried away. Um, so third time I'm gonna simplify as much as possible. And I thought to myself, if I was learning it, how would I do it? I'd want a basic blueprint. Okay, the basics, and naturally you'll evolve into using get the way you want it to. You make it your own niche. So what to do is take what you like from it, leave what you don't like. So I'll go with the basics, and my profit taking is really basic. I don't use anything complicated. So one way obviously you can use is the ADR indicator. I don't have it up here right now, but you can search for it. It's not hard to find. But the main way I do it, okay, one main way is fib extensions. Okay, fib extensions. You know the writing. So I usually use the 127.2, the 161.8, and the 200%. Okay. The other way is ranges. Okay. Now ranges can be categorized in two categories. One, consolidations. Okay. So if market's in a consolidation mode, for example here, how do I tackle that? And then a range with a full leg, and then just call it I don't know, just call it range levels. Okay. You'll get what I mean when I get to it. And the other one is just SR, basic SR. Now they all are basic SR. Okay, they all are. But yeah, base SR, structure. Okay, so I'm gonna briefly go over how I use the fib extension, how I use the range, and then I'll go over how I bring them together. So I don't usually use just one on its own. I use them together. Okay, and you see what I mean, and then you just practice it and then find what you like. Okay, it doesn't have to be complicated like a 3 hour video. I think a lot of people when they see a teaching video they think it's gotta be 3 hours. No, this is probably gonna be less than 20 minutes. Okay, this is basic what I do. So let's start with um let's start with the consolidation. Okay, and then we'll build from there. So let's take for example this. Okay, there. Now I always mark out my higher time frame levels. Okay, so with this, I'm gonna do something similar, but just say this is the higher time frame. Forget what time frame it's on. Ignore the time frame. Just focus on what I'm gonna go through for now. Okay, clear your head. So let's start off. Okay, let's go to the 30-minute chart. Okay, and say okay, we had a leg up. Okay, now what are the on its way up? What are the key levels? Okay, well one is obviously this here. One is this here, and ultimately we approach the extreme. So if this is one leg down, we're approaching the extreme. Okay, obviously it's that level there, but before that we've got this level here. Okay, so we'll refine that a bit more down there. Why that? Because that was the once it broke, caused that high, that was the low, broke up, down, further confluence, resistance there, resistance here, and it's pushed up. Now when it's pushed up, we don't know if it's gonna go there, but it's there. So you gotta have all these levels marked up. Okay, so that's one level, KSR. Just keeping it basic for now. Okay, keeping it basic for now. So once we've identified that, so we're using KSR now at this point, obviously, not obviously, but usually after a big trending move, what do we get? A consolidation. Now we don't know if it's going to be a short-term consolidation and then carry on up, or is it going to do one of these ones? It's only once price action unfolds we know. But what we do know is, say if price went into there, for example, the moment it started to break down from that, okay, it deviated that level, we know it's significant because resistance, support, once it broke through it led to the leg lower. Once it starts breaking down there, boom, I'm out. So let's break this down and go to a lower time frame and just see what that looks like there. Pushes up, starts to get exhausted. As soon as it closes below, boom, that's it, I'm out. Assuming, say, wherever you got long from, whether it was there or there, it doesn't fucking matter. You just get the fuck out then. Okay, done. That's one way of doing it. Okay, another way is of trading your stops. So for example, say you were long here. We'll get to the trading stop loss afterwards. Okay, so that's just basic. That's an example of basic SR. Okay, then what does it do? It gets into a range. So I'm going to find another example, okay, of basic SR. So for example's sake, this is an example of basic SR. So once it's broken down, say you are long from here, okay, for example's sake, okay. So all of this obviously it's going to be hindsight examples, but you get what I mean. what are the key SR levels? It's going to be here, okay, and it's going to be here. So naturally, say if you were long, you'd be aiming towards here. Once it unfolds, there, it hits that level, and the second level is there. Why is that the level? Because this was the lowest point, okay, before within this range. So look for minimum targets, okay? We're not looking for extremes, minimum. That was the low. It didn't retest it there. Often when price is going to push up, it'll retest it. It pushed up and it retested it there, okay? Basic structure, that's it. Let's find another example of basic structure, and then we'll break it down into more detail then. For example, say here, okay? This was the low. Oops, it is here. 1 second. This was the low that caused the high, and you can see its key support, resistance. Say you were long for whatever reason, there or there, where it's going to be objective towards there, and that was the objective we went for. There we go. Okay, that's just basic structure. You all know that. Okay, so then it comes down to refining it. So let's clean that up. Okay, so remember what I said? I use a fib extension as well. So let's go back to this example. Okay, and say this was the SR level. Where do I draw my fibs from? So let's take a fib extension from that high to the low, and we can see the 127.2 extension. Remember what I said? The 161.8. Now, what I like to look for is confluence of SR structure with fib extensions. Why do I read from there? Because that's the extreme point, isn't it? From that high to that low. When it comes in confluence, we've got the SR level and fib extension confluence. That's a key level to watch out for. Okay. Now here we get it. Where do we get it from here? If I draw this is a SR level as well. Okay, that's the extreme point. We get the 127.2 lining up around there. So if I was to refine it a bit more down to get the extreme low point, lines bang on there. So if I see a reverse, if I see a rejection from there, then that's usually a point where I collapse some of the position. And if it makes it obvious, like, you know, for example, it goes up on the breaking market structure pattern, okay, we know there's a good reason because the SR level is fib extension confluence. If that happened, where it broke down like this, I'll collapse the remainder. So on the first push up and starts rejection, I'll cut some off. And when it gives me the breaking market structure pattern or breakdown, then I'll collapse the remainder. In this case, it doesn't give you a breakdown. It gives you a rejection, but not a breakdown. It breaks above it, it holds, pushes up. At that point, you could have trailed stop losses to there. Where's the next objective? There. And then when it starts reversing like this, I usually get the fuck out. Okay, so yeah, that's one way of doing it, or you could have been trailed out. That's up to you. But usually when he does this, say I took a third off there, for example's sake, and it doesn't give me a reason to get trailed out to close it, the remainder, another say third off. Okay, and once it starts doing more of a bigger retracement, I'm saying okay, a possible level it could come down to there, because that's SR level. So I would have had my stop trail to there. Now it's up to you. Through experience, you'll know whether to close it like this here or not. I usually would have closed it because it's at the extreme end of the range. Okay, that's one example. Okay, so just getting basics out of it. You'll see with more examples. Okay, so I'm going to do the obvious clear ones first before I do the consolidation. I'll do that. Let's look at another leg. Okay, so same thing here. So say for example this is a range. Okay, we've broken out of the range. How far is it going to go down? So one way is use the same technique. What's the lowest point? There. The highest point there. So I've marked up my fib extensions. So get rid of this. The 127.2. Say for whatever reason you were short, the 127.2. Where's the next objective? The 161.8. In this case, it just busts through it. And then the 200%. Now, what do I do in this case? I want to see some structure line up. So with this, we know this structure there. That was the high that caused the low. So that's the SR level, and you can see it's pivotal level. Why? There, and then there. This is a deviation. As soon as it gets back above, retest there, pushes up, another retest, small test there, breakdown there. So when it comes to starts pausing, that's an excuse to or reason to take some off. Obviously, with structure, you know, knowing that it's broken out of the range, you expect lower prices, but it's an objective to reach for. Okay, next objective, the 200%. Where does that line up? Well, as soon as I start seeing a rejection like this at the 200%, that's automatically get the fuck out. Okay, so just using fib extensions with that. Does it line up with key SR? So usually I'll draw the fib extension, then draw my SR level out. Lo and behold, refine it down a bit more there. We can see a resistance, support, deviation. You see when as soon as it gets back above to the tick support, so you know that's a key level then. Okay, sometimes it's easy to draw it the SR level afterwards, because otherwise without the fib extension sometimes it's harder to see. So you'd say, well, I've got a SR level there, then I've got a level there, then I've got a level there. Okay, they're all valid, but then it starts getting messy. You could do it beforehand, but personally, the way I do it, I'll draw my extensions out, then I'll mark out the 127.2, 161.8, 200%, and then I'll see what lines up. And usually, like this, it lines up nicely. Okay, so that's how I do it. Let's look at another example here. Let's take a pound dollar, for example. Okay, so 1 second. Yeah. Okay, let's do pound dollar, for example, saying. So, what do I do in this case? Well, same thing, isn't it? And this is an example I did in a live example, I remember. So, if you remember, so that's the low to the high. So, for whatever reason you're aiming for lower prices, okay? I'm not going to get into entries or biases. This is just profit taking, okay? Say you ain't looking for bearish biases. Well, you got the 127.2. And what does that line up with? Structure there, those highs there. The 161.8. That lines up with this, some structure there. These highs here. Natural profit taking, and then the 200%. Now 200%, if I was to draw that out, what does that lie with? There. So there. Now sometimes it's going to reverse, or sometimes it's going to swipe through. In this case, it swiped through. Okay, that's done. Okay, and then you can either trail your stop losses, but I'm just giving you the bare minimum. You're going to have to play around with this, okay, and then get it. So that's that there. Let's look at another example of how to use fib extensions, okay. So another way is, so in this case, it's not the easiest of examples, but so this was an example we used previously, and it's in one of the live trading example videos where I got this low. So then you can break it down further, that low to that high, and then there's the 200% there, the 127.2 there. And if you look, that was the way I took my profits, if you remember. And then on the Friday, and then closed, and then collapsed. But it's just an example of how to use it, okay? So let's look at another example now of one of possibly unfolding now. So say for whatever reason, okay, I'm bearish this market, okay. So say if it was to, I don't know if it's gonna range further here or not, but say for example, say it did break down, then I've got objectives to reach for, okay. So low to the high, the 127.2. So let's mark them out, let's draw them out. Does that line up with structure? Well, it's close to that structure level, so that's going to be a key level to watch out for. Further down, the 161.8 just so happens to line up with these highs here, okay. And then the 200% just so happens to line up with this. So if it is to break down, you've got clear short-term objective to reach for. Now, ignore the time frame. This can happen on any time frame. Okay, this could be the daily time frame or 4 hour. This is why you don't need to worry about the time frame. Okay, obviously in the higher time frame you're doing a swing trade, and the lower time frames obviously more shorter term. Okay, so that's it. That's fib extensions. Okay, just using that. So again, if there's anything in this that you don't get, you just obviously let me know, and then we can probably do some of the live sessions or something, okay. But I'm gonna keep it brief as possible. Now let's get to consolidations, okay. What do we do like in ranges? So I'm gonna start off with the first type of range, which is the like this kind of range, okay, there. So what do I do in this case? Well, again, we don't know. Let it do its thing. Let it do its thing. As soon as it starts to turn, okay, then because at this point I don't know if there's gonna be a range. We don't know. We don't know if it's a continuation or it's gonna range. But we're gonna have this level marked out anyway, okay, for obvious reasons. That's why I'm resistance there. And then what we do is, okay, once it's starting to range, then my first point of call is going to be, okay, where do I start find my resistance level? So that's the highest point. So usually I can start a range high there, but no, that's the SR level. So that's the level that's capping the market, okay. So what's the lowest point? Well, when we broke out of this high here, what was the low? Here. And then I'll draw that across. Lo and behold, now pretend, okay, 1 second, I'll draw this out. Pretend that we don't have this price action there, okay. This is starting off. Okay, so I know that say for whatever reason you're long, where you're gonna aim for Well, you're going to be aiming for back towards the range high. But before the range high, what's the target? Short-term target objective there. On a daily time frame, this could be a couple of hundred pips. On a lower time frame, it's going to be 50, 20, 30 pips, depending on what pair you're trading, okay? What does it do? It goes there, it goes back to the range high. As soon as it starts rejecting the range high, get the fuck out, okay? If it breaks out, you can get back in. But now that's proven to be key resistance. If you're short, what are you going to be doing? If you say, for example, for whatever reason you're short, back towards the range low, is there a target before the range low? We got these lows there. Let's see how price unfolded. There, taking that out, and eventually there. So now we can see, hang on a minute, it's range bound now. It's range bound. So what do I do in this case? So now I do my consolidation, draw out my box, and look for equal measured moves. And if I was to do a 200% extension, you'll see that that's the same thing as this. So then what I do is, you'll see me do this a lot of the times. Get that range level out, marker, equal measured move up. Where does it line up? Oh, just so happen to line up around, not exactly. Remember the example I gave? Close enough, okay? You're not going to get a pinpoint, but you're going to get close enough, okay? Like that. And if I was to do this again, where does it come in line with? Oh, lo and behold, right to the lows. So you can draw them out, okay? And this is how I say I'm using confluence. So what was my fib extension level from there to there? Where's that? The 200% extension lined up with my SR level. See the confluence. So what I'll do is I'll use 2, 3, for example. I'll use my fib extension. Then I'll say, okay, once the range is broken out, I've identified the range. Just start replicating it. That's it. Let's do it again for another example. Okay. So this is an example I want to use. Now this is an example we've seen before, but let's go with it anyway. So once it broke down, this was the range low, or was the range high there, and it becomes more apparent as price unfolds. Sometimes I may adjust it, better range high, but let's go with it for now. And look, lo and behold, same thing. It's captured within this range. Until it breaks out, I don't know. Then I draw out the mean. Okay, and let's draw out the mean. So if I'm trading this, at what point do I know the mean? I know the mean usually. Okay, now we've got this. I don't know if it's going to be a range. Once that happens, then and breaks down, then I say, okay, I'm going to use this as my range. Okay, so let's break this down. And now that I've adjusted that, I'm going to have to adjust the mean as well. There. Yeah, it's not going to make that much of a difference. Let's not fuck around with 1, 2 ticks. Okay, there. So now I've identified the mean, and the mean is respected there. So it further refines it, further confluences that the fact that I'm using the right range. So for whatever reason you were long, it doesn't matter. Where's the objective? Range high. Now I usually can get back on board out before. Is there a reason to get out before that? We got a swing high there. It's going to be stop first in there. If you're trading within the range, don't try to go for the extremes. Get out a bit earlier. So stop on there into the air. That's be enough. So until it's broken out, just trade within the range. On the downside, what would be the objective? A range low. There. If it breaks out and gets back within the range, where it's going to be objective, a range high. And that's all you do. Okay? That's just how I do the range. So what do we then do? Say you were long, for example, and it broke out. The exact same thing again. So one of the ways is using consolidation and get rid of this. Get rid of this low because I'm trying to replicate the rectangle. So draw that back in. Let's draw the high there. Equal range expansion. Lo and behold, resistance. Let's throw in some extensions. So going from that high to that low. Oh look, 127.2, 161.8. Now if I was to refine that down now on the lower time frame, you see it better. Let's go back. So using that, where's it gone? Here, okay. On the high time frame you couldn't see it, but now I've gone to the 5 minute, you can see the 127.2 was resistance, then the 161. Oh, what did I do? I just lost it there. Fuck's sakes. Sorry. Go back. There, the 161.8, okay, and it was confluence with doubling that range, and let's throw in structure. Is there structure there? Well, what's the SR level that stands out there? Because once it was within this range, okay, that was the low. Now I'm throwing in a lot of things here, but this is just an example of how I use them in confluence with each other. I don't usually like using just one thing. I like to use confluence with each other, but yeah. So we got this. So sometimes you'll have like about 5, 10 pip deviation. In this case, about 14. So I use the bare minimum. So that would be enough for me to get out. As soon as they see this rejection, that's enough for me to get out. Okay. So yeah, it's fairly simple. It's not complicated. What I do? I mean, I did have a long ass video for this, but it was about 2 hours, like I said. But then I thought, what the fuck is the point? We don't need that kind of lengthy video. So let's use a range, the range levels now. Okay, give you 1 or 2 examples of that. Now you all will know this because I do it day in day out. Okay, just because I've labeled this profit taking, you see me how I do it anyway. So for example's sake, right? Say you are short here. Okay. Now, what point do I know when to use the range? It's only once it tops out, then I've got a leg to work with. So say for example we're trading around here, for example. Okay, ignore this. Now I've got a leg to work with, which is this low to this high. Okay, then what I look for? I look for the mid-range. Automatically I go to the mid-range. Has it been respected before? Draw my line, and lo and behold it is. Okay, and then I look, okay, has the 25% been respected, which is the midpoint between the mid-range and range high? Yes, it has. So that tells me the leg I'm using is sort of right. I'm just looking for the levels to act as a pivot. Okay, so let me get rid of this 88.6 because that was just an example I was showing to somebody. Okay, there. And then naturally you'll find the 75% work. So each of these levels are going to be pivotal levels. Okay, so say you were short there, well, that's an objective too as a profit taking level. Whether this was on a daily chart or a 5-minute chart, it doesn't matter. It's the same thing. Okay, and then once that breaks, what's the next objective? It's going to be here. Take some off there. After that, what's the next objective there? So each level you can take some off. Okay, let's give you another example now, and this is probably one I'm looking at myself right now before it's broken out. So before I do that one, let's do another one here. Well, now that once we done this leg lower, at what point do I say, okay, I use this leg once it gives me structure break there, then the bias was bullish. Okay, now I use that leg. Okay, let's do it from the high to the low. Now sometimes I will use the initial low, sometimes I will use the extremes. I start off with the extreme first and say, okay, let me roll the mid-range, and then I'll say, okay, has the 25% etc been respected? You could argue a case for that. Then I'll refine it a bit more down. Say, okay, let me use the initial low made. Does that give me a better level? I think that gives me, so let me draw that out. Yeah, that gives me a better level. Okay, so I'll refine that down, and in this example I'll use that leg. So then I've got this level here, and just lo and behold, it's the same level, isn't it? And the 25% there. So we've got consolidation there around it. Once it breaks it, retests it. Once it breaks above it, retests it. But it's got more of a better level here. Okay, this again comes with experience. Okay, I'll give you the basic blueprint. So now that I'm saying, okay, it's deviated above the mid-range, go back below it, resistance. If it breaks below here, just using the range levels, what's going to be the objective? There's going to be the next objective. Now let me throw in the fib extensions. Like I said, if that was to happen from low to high, lines close around this structure here. So in this case, I'd rather take profit off here. Okay, I'm not gonna be too greedy about it. Or you can just range it out and say, okay, within this grey box, that's my profit taking level, or to watch out for a possible reversal. Then I can break it down and say, okay, on the higher time frames I can't see, but on the lower time frames I can see this thin movement here. That thin movement just so magically lines up with our 127.2. That's an objective. Okay, if it breaks this range, so if this level was to be broken, now these range levels act as pivots, below it bullish, below it bearish, above it bullish, then that takes us back within resistance to turn support, so like this, and then we aim for these levels here. Okay, so you'll get the hang of it in a while. So let's go with another pair, pound dollar. Okay, so let's choose this pair. Now I spoke about this previously, and I said, and this was in one of the live sessions we did, range low, and I chose this. Was this my range high? Let me draw it out. I can't remember exactly. Low to high. Yeah, it was here. So I used the extreme in this case. Okay. Why? Because this was giving me better touches there. Okay. So say this is all done. Okay. And this is the deviation there. Okay. Now, same range levels can be used for ages, and I'm going to give you an example of a weekly one as well. So in this case, if you remember, what was the trade setup I gave down here? If you remember, recall, it's in the Twitter feed as well. I don't know if this is going to hold, but if it gets back above here, give me the structure, the long, there or there, and just so happened to the tick, the 50% held. Okay, so if you were long, that could have been used as a profit taking objective, okay, or an entry setup. So using that same thing again in Confluence, what would I do? So another way of doing it is for using that high to this low. Well, we'll get to that point later because you can use it in, yeah, let's get to that point later. Okay, so in this case, say you were long. Okay, now when before this has happened, okay, all this, at what point do I say, okay, now the low is in? Once it probably breaks this structure there. Okay, then I say that's a breaking structure. Then I use the range levels. So I know previously, say if I was long, okay, well, I like the fact that it's respecting the 25% because it respected there and then there. I'll draw a line to the mid-range and say, has it been respected? We can see it's been respected there. Imagine this hasn't happened. We got pivotal level there. It's acting as a pivot there. Structure pivot there. Okay, so it lines up with not just the mid-range, but it lines up with structure as well. So if I was long, it would be an objective profit taking level there. Okay, and if it goes into that level and gives you a breakdown, you can get the fuck out. Or if it goes into it, gives you some sort of rejection, trim some off. Okay, and that's that. It's simple as that. Okay, and after that broke, what will be the next objective? The 25% level. Does it have structure line around it? Well, we've got these highs here, these two highs here, haven't we? So say for whatever reason you were still long and you were holding, say you took off a third here and you had 2/3 running, for example's sake. Well, watch it, watch it, watch it. There, okay, in this case it cleanly breaks it. Okay, it breaks back below it, so you could either have trailed your stops losses there, for example, or whatever. But if it does get back below it, you could just closed it there, or trim some off there, and then remainder, held it. But you know it's acting as a pivotal level. So it's not going to be perfect, okay? But at least it gives you a reason to take some off at a specified or specific level. That's the objective. Don't say, oh, it's got to be 100% off there and it has to be the high. No, get the fuck out of that mindset, okay? Get the fuck out of that mindset. No one's going to be 100% perfect catch the low. No one's going to be 100% perfect catch the high. But you use this as a way of finding a reason to trim some off. Think of it like that. Find a reason to trim some off. You may use moving averages, you may use whatever reason. This is how I do things, okay? So that's that. Let me see if I can find another example. Okay, so I had loads of examples from past. Now I'm just saying, fuck it all, man. Let me just go raw in how would I approach it. Because another reason I'm doing it like this is because it makes it look less. No, what's the word I'm looking for? I'm not saying I'm form fitting the best example. I'm just finding recent examples here. If I want to find the best example, I would go all the way back, find yeah, this, that, the other, no. But what's the point? If someone's to ask you how to do it, the best way to do it would be okay, straight into the market. How would I do it? And that's what I'm trying to portray across to you, and that's what I'm trying to say to put across that it's not as complicated as you may think. So let's go with a random pair. I'm gonna run a pair right now. I don't know. What did pounds we see before? Um, Euro GBP. Now we have looked at Euro GBP recently, but let's look at this for example. Okay, so what do I first look at? Well, the first thing that comes to mind, obviously, once we've created that range, what's the low there to there. So I'll start off with the extreme end of the range. Okay, now where do I start drawing my structure from? Once probably price gets back below here, then I start saying, okay, we could have a leg in. Okay, so then I start looking for mid range. Now I'm looking at my mid range. Okay, that's a mid range. What if I was to use the initial? So start off with that low there. What if I was to use that? No. So this low is giving me a better range level there. and I can only use the information based off this, okay, and this. So now, okay, so well, technically once that breaks down, I can only use this leg because that would be right saying that. Okay, I know an objective to reach for once it breaks this level, and I can see that the 25% has been pivotal. I can see the 50% has been exactly pivotal, and I can see the 75% has been pivotal. Okay, boom. So now when it breaks down, where is it going to be aiming for? Towards here. But before that, what do we have? We have these lows here, and then these lows there. Okay, so let's draw them out. So I mark out this low, and then I mark out this low here. Okay, bare minimum targets. So say for whatever reason you were short, where would be the objective? There. It hits it, starts pushing up, takes some off. If it's still got a massive bearish bias, then you know you can always get back in. Where's the next objective? There, and in the mid range. Now you could either collapse this and then get back in later. What does it do? It acts as a pivotal level. So it ranges for a while here, as you can see. Okay, but it gets back within the range. At that point, even before it's broken out, say if you were shorting it, where would your objective be? Range low. Say if you were longing it, where would your objective be? Range high, range high, range high. So you can see when it's within the range, you aim for each range high unless it's broken out cleanly, gives you another setup, but trade it within the range that like this. Okay, when it breaks out of the range, retest lower prices. Where will be the objective? There, clean break of that. Where is it? The next objective would be towards the range low. Do we have reason to go take off before? Well, here got a bit of a gap there. Okay, and it's at SR level. So if I was to clean this up and do it, okay, high. Now let's use the fib extensions. So there's many swings you can choose. Okay, I'm gonna go for a recent swing. This is the low to the high. Lo and behold, the 161.8 to the tick. Can't make this shit up. I can use another swing and say, really this is where you practice. This is where you're gonna practice. You know, I'm gonna get a question. Oh, which one do I use? Well, is it magic that they just confluence each other like that? From that swing to that swing low, get rid of this. That also happens to be the 161.8. This also happens to be the 127.2. So they line up. You gotta practice it, okay? There's no right or wrong way. Sometimes I'll have to adjust it many times. Sometimes I'll have to use this low to that. Sometimes I'll adjust it. But that's where the practice comes in, okay? The lazy fuckers here, they'll just do this. But if you're serious about it, you're gonna practice it. I've given you more than enough to work with now, okay? So let me know what you think. That's the basics on how I take profit. If it needs more, then I may have to do a more detailed one. Go with the 3-hour video. But I think what I've given you is more than enough. Let me know what you think of it, and yeah, we may have to do another one. Okay, but yeah, I like your feedback on this.